exciting panel. Panelists, if you can turn on your videos and join us, that would be awesome. So tonight, it's not about me, it's about the exciting people that we have who have graced us with their presence. Building wealth through investing stocks has not been easy or commonly accessible to most people on the continent. These companies that we have here with us today enable access to the best investment opportunities, from investments on the continent to globally, from connecting Africans to investments that earn returns, investing such as in large brands such as Apple, MTN, Dangote. These companies enable Africans to earn their wealth own their future through building wealth. So join me today for what's going to be an exciting discussion with some amazing founders who we're very honored to have with us today. I'm a big fan of each one of them and the work that they do. Building in Africa is tough, and so I have a lot of respect for every single African tech founder. And part of the reason we started the Build Our Africa series is to connect people with founders that are doing incredible work in the space where they can share their journeys. It's not as easy, even though you see Tosin smiling or Eke or Ahmad smiling all the time. The stuff that these guys face behind the backgrounds is very commendable. And so we're going to be talking a little bit about that. You get to hear parts of the building side, stuff that maybe you don't see on the news articles, on the TechCrunch drops here and there. So I'm excited. So ladies and gentlemen, without further ado, I'd love to introduce the panel that we have here today. So we're going to go around quickly to each person. In a minute or less, if you can tell us what your company does, what market you currently operate in, and if you could only eat one food for the rest of your life, what would it be and why? So Ahmad, we'll start with you.
I think I would start with the last question. So my son just asked me this same question yesterday, and I told him it's either sushi or Mexican, and I had to choose one, and I went with sushi. But I think this should answer your question. So Thundr is an investment platform that makes it easy for everyday individuals in the Middle East and North Africa to invest in stocks, bonds, and mutual funds.
Nice, lovely. And you currently just primarily operate in Egypt, is that correct?
Yes, currently we are focusing on Egypt, exactly.
Amazing. Eke, please welcome.
Thank you very much. I'm glad to be here. Yeah, so my name is Eke. If I had to eat one thing for the rest of my life, it'll probably be plantain, just because I can cook it in so many different ways. I can boil it, fry it, make chips out of it. And so it's easier for me to just not feel like it's one thing. But my company is called Risevest. And what we do is that we're a wealth management app that allows Nigerians today to invest across several dollar-denominated assets across the world. So primarily we offer equities, real estate, and fixed income investments that are managed by the app, but just easy and affordable for retail users.
And this is primarily for people in Nigeria who can purchase these directly, right?
Yes, all our users are currently in Nigeria.
Nice, amazing. I think we had Tosin drop off, but he should be joining back here very soon. So we'll ask him the same question as he starts. So you each have been doing an incredible job in transforming investment opportunities across the continent, because you're enabling people who maybe couldn't access these securities as easily to make it simple, fast, and easy for them to access at a convenient place for them, right to their mobile device. What have been some of the, a lot of people have often asked, like, given on average that Africa's treasury and bond market delivers returns, why did you decide to give people the opportunity to invest abroad versus, let's say, investing in local treasury in the market? Maybe, Eke, we can start with you on this one.
Sure. So for me, it's two reasons. One is we didn't want to solve a problem that was already solved. So there are wonderful companies operating in Nigeria that already help digitalize Nigerian products and Nigerian investments and make it affordable for the retail user. But there was nobody who was offering the opportunity to go beyond Nigeria and like access investments globally. And so we figured that, hey, that's somewhere that we have an advantage in, because we have an entity investment firm both in the US and then locally, so we can bridge that gap, right? So that's the reason why we started where we started, so to bridge a gap. The second reason is that as the internet has expanded, opportunities exist way around the world than just what's available locally. And so for the average player, just staying with what you already have at home is no longer enough. You want to access the world. And so we make that possible.
And wasn't there like, you mentioned these companies that do this locally, right, that enable people to purchase these treasury. Was there ever a discussion about the idea of returns? For some of these treasury bills, at least even here in East Africa, the returns are pretty decent for people. So how did you guys go around that discussion while making this decision to enable this whole new market, but also like considering like, okay, maybe we're not going to push as much for the treasury or local T-bills, and then we're going to primarily go for this, stocks abroad?
Yeah, so it's really all about where is a lot of the growth happening, right? So there's marvelous wealth being created globally with modern, newer, tech-driven companies, and a lot of them have created so much more wealth than the local investments, local treasury bonds, local stock market. And so for a lot, it started to feel like Africans were a little bit cut off from that, right? So Twitter has emerged, Facebook has emerged, just hit $1 trillion in valuation. Apple has been leading the pack, Google has been around. And so it's like, we're all using these companies, we're contributing to their valuation, but we're not participating in the wealth that they are creating. And so that became like a very strong reason why opening up the global space became necessary.
Awesome. Ahmad, how did you guys think about that in Egypt?
So at Thundr, it's a bit different. So in principle, what we believe in is this idea of offering an investment supermarket for our users. So at the end of the day, we want to make sure that our users have access to different investment products. Each of these investment products cater to the different risk and return preferences. Actually, in Egypt, we started with local equities. And this is the current product that we have. And then we added mutual funds. You added mutual funds, which have exposure to treasuries, and another one that has exposure to equities. And we are now in the process of adding US stocks. In principle, we want to make sure that we have access to the different products. Actually, since building our Africa is the theme here, I think it is very important that we make sure that at some point in time, there are these functional local markets, because these will be the engines for the companies. Because again, when you look at the US, they are where they are right now because Apple was able to raise money through their stock market as early as possible. Same goes to Amazon, same goes to Facebook and most of these companies. And we want to make sure that we are giving the same opportunity to companies in our region. But we acknowledge that this is a bit of a long-term process, and we are onto it.
Mm-hmm. Yeah, I know. I totally get that it's never going to be like done from day zero, right? So, there's always a long process of like learning and probably many challenges, which I'd love to hear about it. So one of our next questions that we're going to be jumping in here. Also, for those of you who just tuned in the audience, feel free to write your questions in the chat. If you're joining us as well from social media, feel free to tweet #BuilderAfrica, and we'll source as many of the questions as we can. Not use the chat. If you're on the Zoom link, use the Q&A section over here. That would be great. Okay, I see you are here, but before I jump to you, I would love to invite Tosin because I think he missed the first question. So Tosin, tell us in a minute or less what your company does, what market you operate in, and the most important one, if you were to only eat one food for the rest of your life, what would it be and why? We've heard sushi to plantain. Let's hear it from you.
Yeah, apologies, just had an internet outage. Yeah, so with Chaka, what we do is we enable borderless investing options for African businesses and individuals, mainly through stocks. So you can buy your favorites within Nigeria, where we currently operate, or around the world. Our goal is to do this across Africa and bridge the gap between Africa's financial markets and the rest of the world as well, making it easier to invest in as well as out. In terms, and then the question was about food. Yeah, it's going to be, so it's amala and ogbono / okra, which is draw soup. So yeah, it's just a Yoruba, I even call Yoruba. Yeah, sure. It's a Yoruba favorite, a central tribe in Nigeria. I can eat that like I'll just never get sick of it. So yeah, that's the one food for the rest of my life. It's that or jollof, but you know, rice, you can get tired of rice. So
we've been told on this panel before that Ghanaian jollof was the better one, but you know, just to keep everybody safe tonight, let's just we won't ask that question. I see it already getting amped about this one. So I asked the next question. So Tosin, I'll come back to you. But one of the questions I'd love to hear, we'll start off with you on this one, is about challenges, right? What were some of the things, and this is a question to all of you, we'll start with Tosin, then we'll go to Eke, then Ahmad. What were some of the things that you wish you knew about this business before you got into it?
Yeah, no, this is a great question. So I think we were right on the money with a few things. So I'll just mention a few things. So it's you know, regulation, the degree of trust that's required to operate well in the market across board, and then how important financial knowledge is for business. So I don't think any of those were strangers to us, but it's just the degree. I think what we might miss is just how far you should go to get some things done. And so I would say, you know, for us, regulation is something that's been very important to us, compliance as well, from the jump, even when it wasn't, you know, the zeitgeist at the moment, but we probably could have still taken it even more seriously from the jump. Ditto when it comes to trust and knowledge. I think we probably underestimated how quickly people's financial knowledge would grow, and level of sophistication is, I think, it's getting higher by the day, by the month, you know, and just based on what everyone's doing in the space, you know, Eke is a big contributor to that. So you see that across the board, yeah.
Nice. Ahmad, what were some of the things that you wished you knew right before starting this business that you know now in an expanded scale?
Yeah. No, I think it's very close to what Tosin has mentioned. I think I would mention here 3 challenges, 2 of which that we already knew about, and then a 3rd challenge that was new to us. I think to Tosin's point, and what we call is infrastructure. And in order to open an account, a Thundr account in our region and in our continent, is a much challenging thing than when you do in other developed economies, especially when wet signature is still required and the banking system is not as advanced as in the US and other markets. So there are these infrastructural challenges that you need to be or be part of building it in order to continue to offer your product. I think the other thing is financial literacy in general. So we're a consumption-driven economy in general. Financial management is not in our DNA, and accordingly, we're always expected to put more effort in increasing the overall financial literacy. To Tosin's point, I think the post-corona, and one of the good things about not the good things, I think it's not the right word, like one of the things that that has happened after COVID, I don't think there's any good thing from COVID in general, but one of the things that happened is people had more time to look into what's happening in other markets, get more exposure to this world of investing, and it had its toll on our region, which was a good thing. The 3rd piece, and I'm not sure if it is the same case for Eke and Tosin or not, but with remote working becoming a thing, now you're not only competing with companies in your market for the tech talent, which is extremely challenging to find and retain, but you're now competing with other companies globally, and a country like Egypt with 16 Egyptian pound, it is much more challenging to these guys. And at the end of the day, tech is at the core of what we're doing, and our product is as good as our tech team. So again, like managing, maintaining on this background and not an ex-engineer or a techie.
Right. Yeah, the quest for talent globally is challenging, and so it's definitely one thing that we're trying to, like, I think not just you, but a lot of us startups that would be looking at that. I see Eke's response here. He says his internet's acting up, but his response would be how much the financial education gap existed would be his first point. The second is how hard it is to move funds across borders inside and outside of Africa. And third, which I think he agrees with you, Ahmad, he says is just how hard it is to find and keep talent within the continent. I'm guessing on that one. Tosin, we've had this question pop up, and
Benjamin.
Yes. Sorry, go on, Ahmad.
I think if you would allow me, I think there is one more challenge that we all face, which is internet connectivity in Africa in general, and I think we're seeing it right now in this Zoom call.
Exactly. We're in 3 different countries over here. We've got Egypt, Nigeria, and Tanzania over here. So yeah, that is factually correct. One of the questions I have for you, Tosin, a big question when we announced that we were going to do this session was a lot of people reached out to us and said they want to know about market size, discuss market size. I can't tell you how often that question came up. It's probably a question you guys get asked quite a bit. And what I'd love to do is just peel it apart a little bit. Like let's look into certain elements of it, because I think there may be some assumptions about the market that people may not know as much as you guys know, given you work and operate in the space. And let's unpack that a little bit over the next 10-15 minutes here. So Africa's population seems to be interested in schemes like forex trading, betting. For example, with data, the sports betting market just between Nigeria, Kenya, and South Africa total $40 billion. Right. So a lot of people are like, oh yeah, let's just put money in sports betting, whatever. My understanding is quite a lot of betting is limited in Egypt for you, Ahmad, but online betting is not. It's not illegal in Egypt. Tosin, what's your thoughts on this? Given people like, oh well, everybody's just investing in forex trading, sports betting, etc. Like, and you guys are trying to allow people to invest in stocks. Is there truly a market for that? Given the quick interest in like making a quick buck with sports betting and larger returns is what you hear. What's your perspective on this one, Tosin?
Yeah, I think there's maybe the states of the world now, and there's where it evolves to, and where we're trending with when you parse it with a few trends. So like you mentioned, as you meant, I think more people will be down for entertainment than education in general, right? Like the faster, more impulsive, maybe even worse for you thing, they get more attention up front. But then over the long term, you would expect most people to churn through that, and anything that's more sustainable, they can hang on to. And so that's how I view, like, let's just call it, whether it's betting that's rigged against you, or betting that's, or things, financial speculation that's rigged against you versus the long-term investing habit. And so I think market size is constrained by, how easy is it to get involved. So that expands the retail population. And then when you look over the long term, how much are people able to be convinced that this is better for you? So, it is objectively true. The longer horizon you take, the more it becomes true. And how many people can get into that habit. So, our mission is all about maximizing that population, both in terms of people, but, maybe this is probably different for Ahmad maybe in Egypt, where they do have a more sophisticated financial market. But I would say across the board in Africa, even among run-of-the-mill businesses who are trying to manage their treasuries, or even financial institutions, there is still like financial literacy or the need to grow financial knowledge across those. So I think it's beyond retail as well. It's also business institutional as well. So the exact numbers, yeah, we can get into a consulting type case thing to break it down, but I would say those are those are the what's it called? The vectors we look at, which is, 10 years from now, we expect the barriers to be lower and more retail access to be possible. 10 years from now, we expect financial education to be more widespread and people to be able to make more objective decisions. And 10 years from now, we expect a lot more successful examples that people can emulate. So, when you look at it, what is the restriction is kind of how we look at it. What is the literal thing that stops you from being able to do it? And is that barrier barrier like it's to sustain. I'm not sure it is actually. Yeah.
Definitely. Ahmad, what's your thoughts on this one?
And so two things. One, I think on the market size, I think for us it's very simple. When you look at a market like the US, 50% of the households are invested in the stock market directly or indirectly. When you look at a market like Egypt, less than 1% of the population is invested or is investing, and I would assume the same for Nigeria and other markets in our region. But I'm not worried about the market size. I think the gap is huge, and to Tosin's point, it's not worrying about the market, it's worrying about how you educate people, how you enhance access through removing barriers, because this is what needs to be done, not the market is there. The friction is what needs to be removed. The other piece that you touched upon, and I agree with Tosin, I think one of the things that we are promoting at Thundr, and we want to make sure that it is the case for our users, we're trying to promote two main things. One, investing should be a long-term process. We are big fans of what Warren Buffett mentioned. If you are not willing to hold this stock for 10 years, don't even think about holding it for 10 minutes. This is the kind of mindset that we're trying to promote. And the other thing is investing should be a habit. The more regular you invest, the more it is part of your routine, part of your discipline, the better. And you always say this, the two never failing tips are: the earlier you invest, the bigger your or the more you should expect to earn. The more regular you invest, the better your return, because there is no need to time the market anyway, because even when you buy at the lows, you're averaging your cost down, but on the longer term, you're making more money.
So let's talk right there, Ahmad. And I'm going to come to this question directly to you as well. You know, if we look at this, actually for all of you guys, this following question, like I wanted to look at some data. So I went like looking for some research, because the amount of people who asked us this question when we announced that we were doing this panel, I was like, okay, let's see how we can carve this out with some data to back this up, to see like, okay, you know, how big is the opportunity here. So here's some statistics that I found online. So approximately 10 million people, about 1% of people on the continent, who make about $25,000 a year. The data is blurry. It might be truly between 10 million to 30 million. Who knows the exact? But 25,000 for context, because you compare it to the United States, that is the poverty line in the United States. Yes, I know it sounds pretty harsh to say that, but that's like factually where that is right now, right? And if you're saying 50% of the population in the US, so now we have to think about, okay, building an application on top of that. If you grow quickly, there's a pool of people that you could probably get on. But then there's assumption that people might say like, okay, well then that growth stalls, right? But then Tosin mentioned, like, where is that in 10 years, right? That population size is probably going to grow, the income level size is probably going to increase, and therefore the market size is increasing for the amount of people in total. But then you also talk about these challenges that you both mentioned is on financial education. Like, how do you educate people about these stocks? Because that's also pretty expensive to be able to do. What's your take on, like, you know, just that statistic? You know, if you look at a company in Indonesia like Ajaib has the same amount of people in Indonesia is the same amount of people in Africa's total population who earn the same amount of money. Like that 1% who earn $25,000 is the same population in Indonesia, just in one country, that earned that same amount. How do you guys look at this from a market perspective? You both are in really, really big African markets, Egypt as well as Nigeria. But what's your take on this one? We can start with you, Tosin.
So I think it's a really good observation. So something here that we look at, kind of look at it at the extremes when it comes to how things will play out, which is, would this still make sense if people were, on average, people's incomes weren't growing, or could even go in the opposite, or stagnating, or does it depend on growth? I think that's also the same question. For me, it's a variation of the question, can the saving habit actually still grow or increase while people's incomes stay the same or don't grow as quickly? And I think what we've observed that's been surprising has been, it's really about the friction and the barrier, because it's about how easy is it to start the habit, And then sure, the magnitude of your involvement can change depending on your income growing. And so, a good example I've seen is, there's someone who started investing with us with 2,000 Naira from Maiduguri. 2,000 Naira is roughly what, I think it's $4 right now, right? And that was the starting investment. And then they recurred that investment with that. Now, we reached out to the person and it turns out they were interested in building an investment habit and they just wanted to get started. Now, prior to our existing, that same person would have had to save up, potentially 10x that, or even in some cases 50x that to even make that first investment. And it would have reinforced that to him that this is something for rich people, not for me. I can't do this regularly. Just the ability to make that habit regular, I think changes a lot. There's a very popular savings app called Risevest in Nigeria. And I think it's done such a big, it's had such a big impact in encouraging a saving mentality. So yes, income levels do matter, but I think the barrier being squashed so that you could start with trivial amounts matters just as much to getting people going. Then on the other end, I think the amount of businesses or organizations who can group capital together and then deploy it, I think that's only going to keep on increasing. So I will make the case that Africa will top America or China or India or Asia or Latin America, but I think it will be significant enough in its own right, and definitely makes it worth it for everyone. But I'm not sure if that's the kind of answer you're really looking for. I don't think I can justify necessarily that our market cap is going to trump Southeast Asia or Latin America, but I think it's absolutely worthwhile, and it's possible for it to grow leaps and bounds compared to where people perceive it at today.
Mm-hmm. Thanks, Tosin. Ahmad, how are you looking at this market size given the data I've shared about income levels across the continent? Let's say that 1% earning $25,000. About 10 million people there. And what does that look like for you guys, or how do you guys think about this as a business?
Anna, I have a bit of a different perspective. I think historically, investing has always been exclusive to a certain socioeconomic class because this is only how they looked at it. They categorized people by income level, and then they decided that these are the income levels that can make sense for us to target, and they built business models for this. I would agree to this logic before technology, when you had to have a lot of branches, when you had to have a lot of front-end offices, and accordingly, the economics had to make sense. And the smaller the ticket size, the less the economics would make sense. I think what Eke, what Tosin, what us are doing is all about the opposite of this. We're building our service based on technology. The income level has nothing to do with who we're trying to offer, because if efficiency comes at the core of what we're building, at the end of the day, we don't care whether you are a 1 million Egyptian pounds portfolio or a 1,000 Egyptian pounds portfolio. At this point, our average portfolio as we stand right now is around $150. We had people literally in US dollars transferring to their accounts on a weekly basis less than $5. I don't care a lot about this income level distribution. What I look at is less than 50% of our population is young. Egypt is growing at more than 2% per year. And I assume the same high growth rates for the continent. I assume the same age breakdown for the continent. And these are the ones who are very eager to grow their wealth, are very open to trying out new things. They have the time, they have the knowledge, they have the appetite to try these different investment products. But I wouldn't limit market sizing to income level anymore, because we are doing the opposite.
Mm-hmm. Thanks, Ahmad. Eke, are you back in? Are you there?
Yeah, I am.
Amazing. I know we mentioned internet challenges across the continent, and we have one here. How do you and your team think about market size?
So my answer is very similar to the same thing that Ahmad and Tosin have pointed out. What I want to add, and so basically I agree with them on all the points they've made, democratizing, looking at reducing the barriers. One thing I'm going to add to that is that everyone that works in Africa today, so investment is really, for me, it's a middle class game, because you're working at the point where you can afford to say, here's this piece of my income, no matter how small, that I can put away for my future needs, right? And so my team and I, what we're betting on, and across the industry, what we're all betting on is that the African middle class will continue to grow and expand. And within that middle class, you understand that every single person that works today, there's about 245 million bank accounts on average across the continent. All of those people will one day stop working, where incomes would then stop. And we've never had a generation like what, say, the US or other developed markets have, where there's like a 401k or a broad like mass retirement savings stuff that allows you to say, okay, I'm going to put this money away, and when I retire, I have it with me, right? So today, 401k in the US drives more investment than like the formerly used to be like the rich people that drove the stock market. 401ks, pension funds, and index funds drive the market today. So what we're betting on is that as the African middle class expands, more people are going to need to answer that question of, how am I going to continue to meet my needs after I stop working, right? So it might be $40 a week, it might be $10 a week, it might be $5 a week. But as long as there's millions of people who need to answer that question, and those millions are growing across Africa, the population is growing. So as long as all of those things are true, then our market size is very large, and it's always going to expand. So that's kind of how we think about it. We look at today and then we project into the future and say, can we become the way that Africa's middle class, when they think about their retirement, when they think about their future, they can say, put this money away, no matter how small, and it will be here to take care of me when I'm no longer working. So we feel like that's a huge amount of people that.
Thanks, Eke. Just to refresh the room for everybody who just tuned in as well. So cool to see so many people from different countries around the world. We've got India, Taiwan, China. We've got Tanzania, Kenya, Uganda, the UK. Feel free to keep sending your messages in the chat as well. If you have questions and you're in the audience, use the Q&A section. We're going to be heading into the Q&A section here pretty shortly. I still have a lot of questions left for our panelists. Eke's made me think of another question, and I'd like to start this question with you, Tosin. Is you hear about this argument where even for people who do have money, there's so many other ways to, if you look at on average, the US stock return in the US market's performance is about 8%, right? That's what studies show or studies say. But if you look at the African continent, people may argue okay, well, what if somebody who has money, instead of putting in the stock market, let's say, buys motorcycles and rents them, or invest into real estate, or invest into a farm or something like that, because the perceived returns may be higher. I don't know the actuals, but people may see this way. How do you guys see that, given, then the returns maybe being, let's say, if you take that figure of 8% returns versus the potential returns of them, investing in a motorcycle, something they may know of a little bit better. How do you guys battle with that? How do you guys think about that as a company, Tosin?
Yeah, so I think what's important when it comes to investment is that, unless you've managed to amass all investment options on one platform, that, they're different fits for different people, and, depending on how much allocation are you going to have of what you have. So does it make sense to go 80%, 20%, 10%? Some percentage makes sense. The main benefit of the stock market generally compared to these options that we talk about is scale and at least risk minimization, or let's call it risk pooling, which is, like you mentioned, you can have a great motorcycle business that can turn and give you what, maybe call it 20, 30, whatever percent per year. It could also be shut down and just be dead, right? And, what's your ability to sustain those returns? Pooling in more capital, what's the degree to which you can scale up 10x or 15x, or balance it with your motorcycle and your competing motorcycle, your competitor's motorcycle shop, So investing in the stock market obviously gives the ability to buy into these themes or companies at different levels, and just at that, as a principle with that, it gives more choice for somebody to get their more ideal portfolio or more ideal exposure, in theory. Now, I never advocate against other investment options. I do think building the habit of saving and then investing and knowing what qualifies as a good investment that fits your own profile does a lot more to tell you whether to invest in that motorcycle shop or to invest in the stock market. But we do see that where people, with the biggest misconception that we have to correct is the level of risk in the stock market and how to actually look at that. People sometimes may look at a chart and think about the highest point to the lowest point, like they bought right there, the highest sold right there, the lowest, and then think about, wow, what if I was unlucky and that person, and based on that may react, without quite qualifying, first of all, you would be speculating in that situation. And then what's the probability you got in right at those levels? So, really turning people from having a speculator's mindset to, well, what would actually happen if you averaged in and you bought and held for X time? What kind of return would you get? What kind of risk were you exposed to? And then comparing that against the other investment options. Look, if you've got a sure winner in your motorcycle business, by all means, but not everyone has a sure winner, and most times not all the time as well.
For sure. Ahmad, I'm going to start pulling in some questions from the audience here based on what Tosin's just mentioned and something that you mentioned earlier where you talked about this person depositing $150. I think that was you who mentioned that. But regardless, what I'd love to learn is retention. Retention is a question all of us in tech world deal with, right? We have to, what are we going to do to get the user to do X function that following month or the following week, etc., right? Something that we all collectively think about. How do you elaborate? Could you talk a little bit more about customer retention? Yeah. What are some of the challenges? I know you guys mentioned educational factor about stocks is a really big one, but would love to have a candid answer from you on this one. And then the next question I'll have for you is Eke.
Yeah. Should I start or Eke?
Yeah, go ahead, Ahmad.
So I think it's a very good question, and I think there is a realization right now that it is much more efficient to retain your clients rather than always be on the look for new users. I think one of the learnings that I'm really happy that I'm also listening the same feedback from Tosin and Eke. One of the learnings that we got from investment platforms globally that launched before us, that they only focused on what we call the intro brokerage piece, which is making it as easy as possible for individuals to open an account, not paying a lot of attention to the edu brokerage piece, which is the empowerment piece. What we're trying to do, and the first step towards retention, is not only making it easy for those individuals to invest, but making sure that we are empowering those individuals with the right investment tools, with the relevant educational material in the right and relevant educational channels and formats, because this is the number one way to make sure that you are retaining your clients. Two, the other thing is the mindset that I'm really glad that I'm sharing with Tosin and Eke here. We're not about speculations. We're not about easy wins, quick wins, and these promises that you get put now and you will be a millionaire in a month, because this is not sustainable. We are promoting this idea of this is long-term investing, guys. You need to invest in what you understand. Make this more of a habit. Like Tosin mentioned, this concept, I don't think any individual can actually time the market. I think it's extremely challenging to time the market. What you can really be good at is average down the market. All of this should result into retention. The other thing is what we're trying to do at Thundr, and I would assume Tosin and Eke are doing the same, is introducing the same concept of customer experience that you expect when you're dealing with a company like Amazon, Jumia, Uber, and so on and so forth into the financial markets world. So how can we make sure that there is always a customer experience team that is trying to assist our users from the onboarding to if they have any questions, if there is any bug in the app, if there is any defect. I think all of these should improve the overall retention.
Right. Cool. Eke, how do you guys look at that, especially with the price maybe of acquiring some of these users being pretty expensive, and looking at retaining them and getting them to continue to use Risevest?
Yeah, so for us, it's really for us the learning process, right? And very early on, we knew that we had to lead with very strong customer service. The first version of Rise, I can tell you the retention was terrible. It was just rubbish because we had a strong value proposition, but then the product was not where it needed to be, right? And so we just leaned into user feedback. We gathered all the data that we could on what users were doing and what they needed to do, asked them a lot of questions on, because at the end of the day, are you solving my problem really well? That's what retention is, right? And so we redesigned the app, made improvements to the UI, to the UX, added more like simple ways of accessing the product. Retention went up. We continued that process. We're still not where we want to be. So our CAC used to be like really, really low. It's slowly inching up. I think that's true as the longer you've been in the market. And so we're going through another process where we're reviewing and going through like broad user feedback, spend a month interviewing users, and then we're going to like implement all those user feedback, and hopefully we'll watch our retention number, and hopefully it continues to also go up. So I don't think anybody would have great retention right off the bat, because you, as much as you have an idea or you understand your solution, you then have to spend a lot more time also understanding your users and then continuing to fine-tune your product for them. And that should hopefully keep your retention going up. And I think that that's something that every company should get better at. I don't think we're perfect at it. I think we're still working our way up. And I'm always on the lookout for people who are doing it well so that we can learn more from them. But it really is just, there's so many places, so many good products in our market and across the continent offering different investment services. But if you can always pay attention and implement what the user is asking, you should be good. To speak to the previous question that you guys were answering as well, as far as like how we think about the quality of what we're offering our users, and what technology can help us achieve in terms of what are we the best, are we giving the users the best option, and what if all the other competing opportunities that they also have access to. The way that we think about that is that we use a combination of technology and like expertise, human expertise, to design a superior investment result for our users. So technology allows you to do a lot more filtration, a lot more like metrics-driven decision-making. And Rise does not, so we're not a trading app, we're more like a robo-advisor, because we believe that leveraging those technology to reduce the amount of decisions our users have to make would lead to better outcomes. And over the last year plus, our results have proven that out. And so our goal is to continue to improve on that, get better technology, get better data, get better user feedback, and continue to improve on the products. That should help both our investment performance and our user retention. Thanks.
Thanks, Eke. By the way, we've dropped a link of everybody's companies in the chat. We'll drop it again so everybody can see. And speaking about links, last week I read some great news from Nigeria in the regulation space. Congratulations to you, Tosin, and your team on your licensing. I think you're one of the first, or the first startup in Nigeria to receive a brokerage license from the SEC. That's huge, and I'm sure it took a lot of work. With all of us working in the financial services space,
congrats, man! I gotta say that. Congratulations.
Thanks, Eke.
That's amazing, Tosin. Can you talk to us a little bit about that journey and dealing with the regulation? Because you can't talk about stocks without talking about regulation. I know we touched on this at the beginning. I would love to touch on it here towards the end of the session. How was that? Do you think has the Nigerian CBN being, SEC being pretty open for things like this for you guys?
Yeah, so when it comes to regulation, it's never an easy conversation, I think, and everyone's experience may be different. But one thing we're committed to from the start was that the long term of this being a viable business has to be that regulators are on side and that we're partners with regulators, or whichever players are in, regulators are comfortable with their presence and practices and they're aligned. So we just know that to be true because the regulator also has the ability to with signature signing of a document end your entire business, right? So for us, that's always been something that we've known to be true. So from the jump, we were very involved in terms of keeping regulators abreast of what we're doing. I personally, even though I'm an engineer, I became a qualified stockbroker just so that I could be in a room and they wouldn't look at me like, I didn't know what I was talking about. I still, would tell them I haven't been a stockbroker for very long, just so that they know as well that, that they're the pros. And my co-founder, Bo, he's a CFA qualified wealth manager. So for us, from a regulatory point of view, we always thought that this is something important to take the longer you're in the market, or the more capital is coming on board, or the more serious people you're dealing with. There's just a way that's perceived. So about 6 months ago, we were called out by the regulator directly. We did from that point of view, that did accelerate, let's just say, our intent to be regulated. We always intended to be. We structured as if we were regulated, so that just, that invitation and the engagement just meant that, we made the case for why we exist, why what we're doing is different from what anyone else is doing. So it didn't qualify for a previous license, and hence it needs to be, to regularize, needs to be created, and that's what's happened. Now I think there is narrative about regulation versus innovation, and we're a bit balanced about it, right? So regulators always set parameters and guidelines that end up enabling innovation down the road. It may not seem like it that way, but there is that ability to do that. Of course, it is possible to set regulation that doesn't do that as well. But I think just acknowledging that reality means that you kind of want to advocate for the right regulation more than no regulation, especially in financial markets where it's inevitable that eventually regulation will come. On the boom, nobody wants regulation, right? And then, going down, everybody wants regulation, which is like, protect me. So you just, if you want to leave it to the whims of the cycle, or perhaps there's a way to get a more balanced view that enables everything from everyone. So that's our view. And for any other players, we always recommend, go in, figure out the regulators' goals, see how you can partner, make it a win-win. I think that's the essence of deal making.
Now that you're regulated, does this mean, as a tech founder, you're going to be opening up some APIs for people to build on top?
Absolutely. In fact, we already have a couple of companies, AXA, Custodian, who are being powered by what we offer, and we've got a bunch more to come. So yeah, absolutely, it does mean that as well. Yeah.
So those are available on the Chaka website, I believe. I think I had seen a note about that. So
you just have to reach out, and it's not plug and play. And of course, when it comes to what you're doing, there is also you probably have to be regulated yourself to use them. For sure. So yeah.
Well, he's not offering agentship for he's not sharing his license with everybody yet.
No, you don't have to be regulated necessarily for that activity. Just basically, you probably can't just be a random pop-up site leveraging the APIs directly. But so far as what you're doing, there is some kind of oversight. That's fine. Yeah.
Cool. Ahmad, I'm going to want to do a quick fire round for everybody here. What is some advice you would give somebody who's really interested in the industry that you guys are currently operating in, that might be listening to this and tuning in and looking up to you, each one of you founders, as role models or people of inspiration that they can learn a lot from? What advice would you give them?
Yeah, Anna, I would say, I think financial inclusion in general is not about having a card, rather having access to financial services. And I think this is an extremely interesting space in our continent. And I would echo what Tosin just said, is in such an industry, it is extremely important not to have a transactional relationship with the regulator, rather engage and partner with those regulators. What you will find out that actually regulators in our continent are very much open to change. If you can make an argument and build a case about how are you going to introduce change and how this is in line with their overall objectives of financial inclusion, you will be amazed by the amount of support you're getting. But you do not expect to wait and then them knocking your doors and asking you, how can we help? It's up to you to actually be proactive, go engage with them, and then you would expect a lot of support from the regulators.
Mm-hmm. Thanks, Ahmad. Eke, what's your advice?
So I'll always say this: make sure you're solving a problem you really, really care about, and that you understand the users that you're solving that problem for, because there's so many moving parts. Africa is one of the most strategically challenging places to build any kind of business, especially in a heavily regulated business like fintech. And so it comes at a lot of cost, but what keeps you going, or what will keep you going, is remembering the problem you're trying to solve, why it's so important. So looking at the hashtag for this event, Build Our Africa, we're trying to, Rise's mission is that we want to connect our users to the best wealth creating opportunities around the world, because there's really no other way that the continent would be able to transform the story around wealth creation if we're not connecting to opportunities, right? And so that gives you the motivation to keep going when things get difficult. I think it's true for the other founders on this call. So make sure that you know why what you're doing is important. And as long as you can remember that, you would power through anything.
Mm-hmm. I love that. Always remember why you started. Amazing. Tosin, final words before I hand over to Myra here.
Yeah, I think what Eke said there made a lot of sense. For us, our thing is, trust, knowledge, bridge the knowledge gap, bridge the trust gap. I think still the most surprising thing to me is the rate of growth of financial literacy. I'm so amazed that I actually do think that in 10 years, it's probably going to be some Uber fund started by some people who we just would never thought would do that. So just the level of financial literacy is growing so quickly that all this stuff is within reach of everyone. You just get started and you build from there. But yeah, it's a really exciting time, I think, to be building here.
Mm-hmm. Ladies and gentlemen, if you are in the audience or if you're watching this on YouTube later on, these are incredible founders that have carved out their time and their day to spend with us. Building the continent is hard. It's tough. They go through a lot of different things and challenges to build the companies they build, really driven by what they're trying to accomplish. For a lot of you, a lot of their customers, a lot of the users who use their products, and with their goal of building wealth for people on the continent by investing in local securities as well as foreign securities or mutual funds or treasury, as you heard on this call today. Feel free to go check out their products and support them with the work that they are doing. I'm really inspired. I've learned quite a bit from the session today. And if you have any questions for each one of them, feel free to reach out to them directly here from there on. I'd love to hand over to Myra and also thank everybody for tuning in. And Myra is going to close it out for us tonight and announce our next event.
Absolutely. Thank you so very much, Benjamin, and the rest of the panel, considering all the challenges we've had, just being here and being able to share these great insights. And for everyone else, I think it's also just been a lesson on what we can do and how we too can get involved in investing. And like Benjamin said, you can catch up with what each one of these amazing individuals are doing to build Africa. You can check out what Rise Capital is doing, www.rise.capital, www.thundr.app. That is, you can see it also on the chat just to be sure of how to check for that, and www.chaka.ng. Thank you very much, panelists. Thank you everyone also for sticking around for a couple more minutes afterwards, of course, and especially for everyone who's listening in. You'll be able to find this video a bit later on our website. So go to iwantnala.com and you'll see it there. Also, we are excited because we have another session on July the 13th with one other founder who's, first of all, she speaks 7 languages and she has so much more that she's doing both in Kenya and in Germany. That's Cynthia Wandia. So please make sure that you make a date and participate and be part of that as well. For everyone who's been part of this, thank you. And we look forward to seeing you during the next session. Thank you, Benjamin. Thank you to the rest of our panelists, and have a great night or morning or evening, depending on where you are.
Eke, Tosin, Ahmad, thank you all so much. And audience members, thank you for tuning in. Really appreciate it. We'll connect soon. Bye-bye.